Good morning. Welcome to this fourth webinar of the series we organized until the end of June. Today, we'll focus on one of the expertise which is at the heart of the asset management know-how and history, the social and responsible investments. OFI has built for several years now a comprehensive range of investments, solutions, and services in responsible finance, gathering its offer under one brand, Responsible Solutions. This webinar will be dedicated to OFI RS European Equity Positive Economy, one of our impact investing funds. Béryl BOUVIER NOTA, Deputy Head of European Equity and Head of Impact Investing, will present to you how the positive economy could bring answers to the present crisis. Good morning, Béryl.
Good morning, everybody. Today, we faced with huge challenges. To meet its demand, humanity is currently using the equivalent of 1.75 Earth, what the Earth can provide. That is 1.7 times the rate our natural resources can regenerate. We are coping with an ecological deficit, which has a lot of negative impacts that we have to mitigate with growing population and quick urbanization. Some of the pictures are here to show the global challenges we face. Let's start with environment. Water. 2 out of 5 of the world population do not have hand washing facility with soap and water at home. Waste. We have to reduce waste and recycle it properly to protect natural resources and reduce CO2 emission. Pollution is one of the largest health and environmental problems. 4.2 million deaths occurs every year. Water-wise, 2 billion people live in countries that are currently experiencing high water stress. In this context, clean energy production is a key contributor. Remember, 80% of CO2 emission comes from fossil oil. By the meantime, social inequalities are surging, by which I mean not only income gap, but gender inequality, healthcare, and education. Going beyond traditional social issues, we believe the global COVID crisis will foster a massive focus on social issues. Taking care of humans is now capital. People have to be protected. It means for corporate, all the stakeholders throughout the supply chain. This is sure to turn into a huge stress test for corporate responsibility. Indeed, our planet is currently facing the biggest economic hit, with 2.5 billion workers directly being affected by the current lockdowns. That is to say, 81% of the world workforce. Home working has been the common response to the crisis. Access to internet is more than ever a crucial need and should be closely monitored in terms of power and security. Having said that, and precisely on account of these worrying pictures, we believe that increased action on climate change is likely to happen in the aftermath of COVID-19. We need to turn to a positive economy that actively promotes social inclusion and environmental protection for now and for the next generation. The positive economy benefits from a convergence of interest of public and private sectors. We can see policymakers are putting in place regulations which are very supportive. For example, the ongoing support for net zero climate policies as already widely stated by several governments and policymakers. Today, consumers want to be more responsible on their impacts. In order to reach these targets, we need investment in innovation, in R&D, in technology, in new processing, and more digitalization. Companies are key in the positive economy, as they are the ones who are going to deliver products, solutions, and increase employment. All these companies should have a positive contribution to our reference framework, the SDGs. But we are not talking about philanthropy. In order to reach the SDG by 2030, it is said that $12,000 billion investment is needed for business and sustainable development. The positive economy is based on 4 thematic: energy transition, protection of natural resources, health, well-being, security and safety, and social inclusion. The investment of the positive economy is based on all European companies which have almost 20% of their revenue linked to what we consider a sustainable business. Around these 4 thematic, we have defined 60 sub-thematic. For example, in the energy transition, we are looking at renewable energy, all the companies which can improve energy efficiency, green buildings, and providing new solutions like clean tech. All the companies which are part of the investment universe for the positive economy are pure play. They can provide a direct solution or work on a new disruptive innovation. There are also companies which are in transformation, building and changing their portfolio, or allocating new capex in what we consider sustainable development. And at the end, we also have all the enablers, these companies which provide the technology in order to support the sustainable development. In the portfolio construction, it is very important to combine the financial analysis and the extra financial analysis. Here you have a picture which provides a holistic vision we have on a company. So we do look at the financial analysis, looking at the growth potential, of course, and the valuation. We integrate the responsibility of the company. How do the company monitor the ESG criteria? And on the right side, you can see that here we are really looking on what is the positive contribution of the company, what is a percentage of revenue, what is the investment allocated, and what is the purpose of the company, in which extent the company wants to be involved in the sustainable development goals, for example. And the last step is the impact measurement. Here we define the relevant indicators. We get the relevant data in order to be able to disclose the positive impact of a company. On this slide, you have more flavor about the portfolio construction. You have the 4 thematic. So for example, for energy transition, which is about 37% of the portfolio, you have the related SDG as well, and some example of company. For example, you have a big company which is involved in insulation, so energy efficiency, like Chaiko, a German company. You also have Scatec Solar, which is a leading player in emerging country, providing solar energy, and Alstom, which is the leading player on structural growth in rail and the shift to green mobility. The second pillar is around the protection of natural resources. So here we have an exposure to the circular economy. And ACA, for example, is a Nordic company manufacturing pulp. It is the highest private owner of forest, and 20% of the forest is dedicated to biodiversity in order for CO2 captation. The third pillar is around health, safety, and well-being. It's about 23% of the portfolio. And here you have a mix of companies which are exposed to security of process and certification, like Bureau Veritas, and also some pharma company and diagnostic company like BOUVIER. The last column is about social inclusion. So all these companies can provide a product and improve the access to underserved population. Underserved population, meaning in emerging markets, but also in developed countries. On this slide, you can see the highest contribution of the portfolio to SDGs. So 31% is involved in climate change and 24% in the circular economy. On the top of the table, you can see that healthcare is about 34% and sustainable and clean energy is about 21%. A company can provide a solution to different SDG. That's why the total is not equal to 100. I will introduce BIFA. It's a small UK waste management operator in collection and recycling. Every year, about 10 million tons of plastic waste escapes into the oceans. So this company, the bulk of the business is waste. It's a highly cash generative business, but the company, which have 95% of revenue dedicated to this circular economy, is also investing 100% of CapEx in this area. And they are growing, they are developing new projects in energy from waste and new big project on plastic recycling for food and bottles. They will be able to recycle 30,000 tons of plastic in the first year, representing 10% of the UK's plastic bottle waste. And still we have potential to add value from investing in energy from waste again. On the right side, you can see to which thematic it is exposed and the impact they generate. So 125,000 kilotons of CO2 saved through their operation, with 441 gigawatt-hours of energy produced from energy from waste. In terms of ESG analysis, it has the best rating from our SRI time, as it gets the leader category. With Sanofi, I introduce a much bigger market cap, which is 111. So Sanofi is targeting a big issue. 60 million people die each year from non-communicable disease and infectious disease. Their main therapeutic areas are immunology, rare disease, consumer health, vaccines, and emerging markets. They are the leader in the general medicine in emerging markets. They have a growing pipeline, and also they have a strength. In the COVID crisis, we discovered, in fact, we discovered that almost 60% of the pharmaceutical ingredients globally were manufactured in China and in India. Sanofi is one of the few healthcare companies which is manufacturing API in Europe, and they want to expand this activity. So the company has a strong balance sheet, and it can be considered as a value play in the sector. It is one of the few companies which are able to deliver positive earning growth in 2020 and 2021. The positive impact of this company is around social inclusion. So they're able to serve population, like 500 million people were vaccinated last year. 98 million people benefited from 74 access programs in more than 84 countries. And also they are able to train healthcare professionals. Around 363,000 people were trained last year. In terms of ESG analysis, the category is unclear because they have a controversy on one product with the anti-dengue vaccine. They developed worldwide, and especially in Philippines, they had these controversies. So it's a lower category, even though other challenges are much more positive. Coming to the performance of the fund, you can see that we have been able to outperform the market since the change of the strategy and since the beginning of the year. One positive contribution is that we are investing on sustainable equities that on average have been outperforming the market. In terms of contribution, 80% of the outperformance comes from the stock selection. In terms of sector contribution, we had a positive contribution from no exposure to energy, in particular to fossil oil, and very limited exposure to financial, which underperform. We were underexposed to staples, which outperforms the market. The positive economy invests in growth stocks rather than value stock, which was positive to the performance. We are paying a lot of attention to the quality of the balance sheet and the ESG responsibility of the company as well. These are the main triggers of the outperformance. The only year in 2008 we underperformed, it was because of our small and mid-cap exposure, which were higher than the benchmark. And during that time, small and mid-cap, especially in the second half, massively underperforms the market with the risk aversion. In terms of conclusion, I would like to say that we can see a worldwide growing appetite for sustainability. Retail investors are looking for sustainability investment. This fund has a French SRI label last year. It is well ranked in terms of performance, first quartile, year to date, 1 year, and since the change of the strategy. It's a conviction-based investment process, paying a lot of attention to financial and extra financial as well. We have a multi-thematic approach, which is very interesting in order to catch the opportunities well exposed to structural megatrends. And the last but not the least, investing in the positive economy funds means really you want to support sustainable development as well as achieve financial return.
Thank you very much, Béryl. We have just one question for you. Does the fund exclude any sectors, please?
Yes, we do. If you please come back to maybe the slide, I think it's the slide 5. Here you can see that in the construction of the investment universe, we only focus on sector which can provide sustainability. It means that de facto we exclude, for example, tobacco, we exclude alcohol, we exclude fossil oil. So we have some exclusion by definition of the construction of the positive economy investment universe.
Thank you very much. So thank you very much for attending this webinar. Just a reminder, so next week we will talk about convertible bonds, and you will find on this slide the next webinars until the end of June. Thank you very much.